Good morning, America. Good morning, rest of the world, wherever you're watching from. It's 12:30 UK time, 7:30 Eastern time, and welcome to June. It's the first of the month, a whole new month of trading ahead for us. I'm Stephen Hoad, aka the Stop Hunter, giving you your early morning dose of what's been going on in the markets this side of the pond, Europe, rest of the world, and bringing you in today's action and hopefully taking you through to the weekend. Now, lots been going on since we last met this time last week. We had the long weekend. You guys had Memorial Day and we had a bank holiday over here. So a lot of the grunt out of the market over the weekend. So it was a slow start to the week, but the story dominating the headlines, as everyone is aware, is the debt ceiling issue, problem, whatever you like to call it, seems to be on the path to being resolved and a resolution in place, a bit of a compromise deal. But the markets this morning, well, they took it reasonably positively, up slightly, as we'll see in the charts soon. So that leads us on to the next phase, which is part of the discussion, which is interest rates. What's going to happen next there? Now, we had some jobs data out yesterday that stirred up the pot a bit. We had some Fed governors coming out, also speaking about maybe we should just have a pause and take sort of time for reflection, see what's going on before making any call whether we should go up, down, sideways, whatever next. But if we looked actually at the Fed funds calculator, interestingly, the start of the week, the number on the left, the bar on the left, is the chances of an increase, and the the bar on the right is the one on the left is for it staying the same, the one on the right is for it going up. Now, earlier in the week, that was the exact opposite. It was actually, for the first time in a while, looking like an increase was due there, and what we got now, 67.4% on the chance of it staying the same. And I think that's really off the back of those Fed governors just saying, let's take our time and see what happens next. But it's flipping around all over the place, that number at the moment. So adding indecision into the markets at the moment, making it a bit harder to trade. We've been boosted by the tech stocks. Again, earlier in the week, we saw Nvidia shooting off past $400, becoming the first $1 trillion, semiconductor chip manufacturing stock, then just pulled back slightly. Yesterday, we did have a bit of a pullback in the tech stocks, and looking at the open this morning, the pre-market, looking at, like I said, a bit more positive, maybe a bit more money coming back into the upside there. Got to watch out for jobs data later today. It's the ADP national employment data, and then the big one Friday, non-farms. So, get ready for that one. I think that's about 8:30 tomorrow Eastern time. It's always 1:30 over here in the UK, but that one could set the stall out for the week ahead and add a bit more volatility into the markets. So let's just have a quick look at the pre-market action so far. What's going on? We can see, let's just bring up the screen there. We can see, let's be better. Okta down nearly 20%. Then we've got Chewy up 16, nearly 17%. Lucid, the EV manufacturer, still struggling, down nearly 13%. We've got a graph of those actually on the right-hand side. You can see hasn't been a great 2023 for them, like quite a few of the actual other EV manufacturers. You've got the Chinese one, I think I saw there, NIO, on the list, also struggling a bit as well. Other stocks in there of interest, Dollar Gen, NetApp, up 6, nearly 7, Salesforce, CRM ticker, down 6. So it's a reasonably robust price action start today. If you looked at it yesterday, very quiet, and like I said, for the early part of the week as well. So a bit more flow coming into the markets. What else do we need to know? Like I said, it's been positive over here, Europe, and if you looked at the futures markets, NASDAQ, S&P, reasonably up, flat to slightly bullish. Japan, though, still steaming on ahead. We've got that weak Japanese yen, and with the investment into the country seen as an alternative, almost like a safe haven investment country now. The Nikkei 225 has been storming up. We'll have a look at the chart of that in a minute. Chinese data still weak, showing a slowdown there, adding in an extra layer of concern around demand for so many products and commodities around the world. One of those is copper, which again we will have a look at in a moment. If we go into oil, let's start with oil on the charts today. Now, what's been going on there? Let's find the chart. And where are you? There you are. So far today, this is the last few days, you can see it's been coming off the price, weakness in there, the debt ceiling problems, concerns, Chinese demand, US demand as well. There was an unexpected, I suppose, a large build in inventories that the API put out, announced yesterday as well, which didn't help numbers. So a bit of volatility there at the moment in terms of price action. So let's have a look at some other charts at the moment, and we'll start in currencies, I think, today. The majors in front of you on the chart. Who's the strongest, who's the weakness? Swiss franc and the pound strongest at the moment. The two weakest, Japanese yen. That seems to be more of an economic decision. An Australian dollar, a very strong commodity-based currency, struggling down there at the bottom. And what's been going on with the US dollar? I use the dollar index for this analysis, the 3-hour chart here. And as you can see, that little green arrow there, that was the interest rate decision time, and ever since then we've seen a really strong old run up in the dollar strength, sort of pausing around this early 104 area, maybe pulling back a bit, getting a bit weaker the last couple of days, maybe back to the late 103s. Next upsides there, 105. So that leads me on to my Forex chart of the day, and I'm going to stick with the Japanese yen. Over the last week, it's been a bit more indecisive, but with that dollar strength coming back in, I'm looking for an extra push up. This is a Renko chart. If you're not familiar with that style of chart, it just allows me to see the action a bit more clearly. We'll be looking back for those highs around the 140, 141 sort of area where we got this double top going on here. It pulled back and has been bouncing around this 139.4 area, but after that it's on up to the mid 142s. So that's what I'm looking for, that extra push on up there. Now we've got the debt ceiling thing out the way, then maybe a bit more upside there for that currency pair. So something to watch out for in the currencies markets. And moving into cryptos, what's been going on over the last week? It's been flat and steady, really nothing too exciting. All the fun, it seems, of crypto trading has, it's gone a bit stale, really. Not as good as it used to be. It's harder work to make any money in that area now. Better maybe in stocks and, tech, the Nvidias of this world, rather than playing Bitcoin these days. But what's been going on with Bitcoin? Again, well, you can see that parallel area there in the middle of the chart. It's saying it's a sideways, indecisive, range-bound type market, really unexciting. Between 31,000 down to this bottom area here, mid 25s, 26,000. If it breaks, next stop, nearly 20,000, and upsides, if it can, if some positivity does get into that market, 36, 37,000 as possible upsides. Now, an interesting market to follow, and one that I like to watch a lot, and one I've traded many times in the past before, is copper. Now, I call that, its nickname is Dr. Copper, the red metal, and it is, the reason why it's called the Doctor is because it is sort of lifeblood into so many different projects, industries, tech, the whole lot, housing, building. It is a great bellwether for understanding the strength of the economy. Now, 60% goes to China, maybe 20% US. So watching the price of copper can lead us to a few conclusions around what's going on in the markets. Now, I've got a few slides for you today to focus you in on what's going on in that world. First of all, what's been going on with copper? So we've got the price action here. It's a weekly chart. It's been going back a few years. You can actually see we had a nice run up, sort of COVID time, to around about the $5 mark, and then the last few weeks we've been coming off. Now, this is what I want to show you, the more interesting part of the data. The large speculators and commitment to traders report, actually the hedge fund type guys, we've gone negative. They're more bearish in their positioning on copper at the moment. That's reflected in that price action. It doesn't often go negative. When it does, it stays in that sort of space for a while. So watch out for that sort of number. What's going on there? It comes out every Friday for an update, so we could see some changes tomorrow, see if it stays negative. But bringing that into what's been going on the last few days, a bit more closer price action, it's been flat. And actually after today, the debt announcement, ceiling announcement, we've actually had a more positive start. So maybe there's some hope that actually it's going to free up the liquidity to, but for people, the producers, the people who use this stuff, to get back in and start using it again. But essentially, you can see below that the daily chart, still not looking that great, but the last few days have sort of based it out around the mid $3 area. Now, if you want to follow this, you can't trade copper futures, then found this ETF. It's called the Global Copper Miners ETF. Its ticker is COPX, and you can see, just bring your attention to this double top we've got in here at the moment. If we're following the strict rules of technical analysis, we could see it back down into this 27, sort of mid 27, early 27 sort of zone before it decides on where it's going to go next. But and again, a lot of support on the key Fibonacci line around the $24 area. Now, if you're interested in copper stocks, what ones could you look at? Oh, I've picked out four for you here. On the left hand side, we got Freeport McMoran, one of the bigger US copper players. Again, actually they all look a similar sort of picture. We've got that same run up as the metal, and then that down sort of shape to it. Southern Copper there, another US big player, couldn't get past the $80 sort of area, and then has pulled back on down. Two global players there on the right, BHP, Australian, UK type company, again couldn't break its highs. Many hits on the top, 5 of them in fact, and its bottom area around the 46, 47, and it just seems to be bouncing between that. And for Rio Tinto, probably one of the weaker ones there, it's looking like it's heading south to maybe the early 50s and breaking on down below. So that is some copper play ideas for you there. And moving on to the final sort of bits on the commodity side, some other ones I keep my eye on. We've got gold, and that decided it wanted to break down out of this sort of pattern last week or a few weeks ago, and then sort of stabilized. This is the key number in gold at the moment, 1950. You see it holding below, it's bearish, and I expect it to come down into the 1800s. And if it's holding like it's looking like at the moment, there's a lot of noise around that Fibonacci line in the 1980s. Then again, it's back into this range into the early 2000s. Now, the RBOB gasoline in the middle, it's all about driving season. And we've seen over the last week the price come tumbling off. Maybe the end of the buying process there has drawn out, finished off, and it's now back into this sort of early $2 area. And nat gas, well, it's the same situation as it has been. Storage, lack of any interesting weather, making it stay in this, like I said, descending sort of triangle pattern, heading back towards those lows around about $2. So let's move into stocks now and the stock markets. Let's start with this very messy looking chart. This is 2023. I've plotted as many of the major markets around the world as I could, just to show you who's the winners and losers so far of the year. Now at the top we have the Nasdaq 100 up 30% so far, closely followed surprisingly by the Russian stock market, the MOEX 10 up 27%, a lot of finance energy companies in that lot. And then there's that Nikkei 225, Japanese one, up 18, nearly 19%. Down the bottom we have the Hang Seng Index, that's a Chinese one of the Chinese stock markets, down about 7%. So quick look at where we ended up yesterday on the S&P 500. It wasn't a very pretty picture really. Maybe health technology, the pick of the sectors there. Let's just have a look at the Nasdaq 100, see what was going on there. And again, not a great picture. Maybe Tesla, Meta, I think that's AstraZeneca there, maybe the pick of the bunch yesterday, but the big boys, the Microsoft, Google's, weak, and Nvidia giving back some of those, and AMD is, closely correlated to that because of the sector that's in, giving back some of those big gains that we've seen over the last week's months. In terms of global markets, what's been going on, we've got the top left, the DAX 40, that's the German stock market, still looking very strong. It pulled back the last week, hitting that trend line, so looking for a bounce back on upwards. The Australian ASX 200 breaking out weak. Remember, that's again an index dominated by commodity type companies. So any weakness in that sector, then you'll see weakness there. Nasdaq 100, as we've just seen, flying on upwards. FTSE 100 over here in the UK, again coming back to this strong trend line that we've seen. So it's make or break for a move down or a bounce back up. Bottom left, Hang Seng, as we said, the weakest of those big markets, looking still weak and maybe moving down to the 17,000s. Japanese Nikkei 225 staying strong, and the Nifty 50, that's the Indian stock market, a good recovery from this pullback in sort of March time where it ended, and then it's rebounded on back in towards those highs. And then to finish there, China A50, one of the big Chinese stock markets, again breaking down south and looking very weak. So currently on the S&P, what's been going on this morning, you can see actually just the night before, you can see where the vote impacted the price, moved it on up. Actually, it's gone pretty sideways at the moment, so nothing too exciting there. But the good thing is, which I like to look at, is the volatility, the VIX, what's been going on there, and it's down. So that to me is more a bullish sign, and we can correlate that up with its inverse correlation to the S&P, and we can see there's the interest rate decision. We've had US dollar strength, and we've actually had the S&P moving on up ever so gradually as the volatility has decreased. So at the moment, it's, I would say, in a weak bullish sort of environment. And into some sectors, I've picked out 8 for you to keep an eye on. Now, an interesting one at the top left there, its ticker is CRUZ, and it's a cruise line / airline, call it a travel type one, but there's a good weighting to the cruise stocks, and they've been doing quite well, which, as you can roll back the years to COVID, when we were going through that crisis, those type of companies, your RCLs, were looking very weak and almost down and out, but they've bounced back quite nicely. So that's that sector there, and it's holding its strength. Insurance sector next to that, very weak and looking weaker still. Then we've got utilities, again on the way down, and a really weak one is metals and mining. So those copper stocks that we've looked at just a minute ago, maybe a play there, buying puts going short down there, could be of interest. And we've got a couple of positives there. The tech sector, unsurprisingly, driven by all those big guys, the Nvidias, AMDs, Googles, Microsoft's, Metas, all pushing it upwards. And then we got the AI stocks, and we saw, one that's talked about a lot at the moment, C3 AI. I think that came down quite heavily yesterday. But generally, though, that sector's still holding strong. Another weak one, retail markets breaking on down. And to finish up, cybersecurity, stocks like Palantir pushing up, broken out through that, sort of wedgie type pattern and moving on up higher. And one of the weak areas at the moment are China. And again, if you can't directly trade the Chinese stocks, here's an ETF for Ukraine shares, CSI China Internet, ticker KWEB. Again, you can see it's down 83.5% to those lows from 21. Real big down push, bit of a bounce back. Can't budge past this $36 area Fibonacci line, and again heading back towards the $17 mark. So that's a play there in on sort of weak Chinese stocks, and some to pick out as well. Popular day trading stock Alibaba, again moving on south. JD.com, this is probably one of the weaker ones that I found, again breaking down south, maybe moving towards $25. Baidu in the bottom right there, that's like the Chinese Google, bit more sideways action. And the one I liked the most, been trading it a bit, is New Education, online e-learning type business, holding the key Fibonacci line around $35-36. Maybe it will rebound, but plenty of ADR stocks to pick from in the US for these weak Chinese stocks. If you don't want to do the ETF, can't trade futures, then plenty out there for you to get into. Now, something else that I have sort of put together, and I'm going to call this the Backlash Stocks Index. We've all seen that, the controversy. I'm not going to get into the politics of it all, but I suppose it's companies pushing an agenda on its client base, and the client base not liking what they're seeing. So I've put together a group of stocks, that have had issues over 2023, just to see what they've been up to. Now, in the top left, we got Ford, and actually in the last few days, they've bounced back quite strongly, breaking on upwards. And then in the middle, we have Anheuser-Busch, and we all know that's the Bud Light guys, breaking on down, very weak, lost billions of market cap from that marketing campaign they ran. Target, still a target for investors to the downside, still running on down, 132 sort of dollar area, could go much lower still. Starbucks as well, another one that had issues out in India, price ran on down, but looks like it could be holding around that key strength, which is $97, $98. You can see it multiple times there. Nike, again, broke down May time, and it's looking very weak, but maybe some support coming in around $102, $103. Finally, Adidas there as well, maybe coming up to key trend line to either bounce on upwards or kick down further. So that's called my Backlash Stock Index. I'm going to be keeping an eye on those, or adding more, as I'm sure this whole sort of story, cultural wars, develop over 2023. What else do we have? Well, we've got earnings later today after the bell. We've got Broadcom, ticker AVGO, and Lululemon. And I've just worked out the options market expectations and movement to the next expiry, which you've got one tomorrow, but a week Friday. Expecting the market plus minus 11.4% movement on Broadcom over that period of time. You can see it's been really strong market stock play at the moment, really taking off in the last few weeks, along with those other similar stocks. Lululemon in the middle, the apparel, sports type wear company, peaked at those highs, couldn't really go on any further, and then has been pulling back expectations, just under 10% in either direction in terms of price. So watch those earnings coming out later this evening. And really, we've sort of run out of steam in the earnings area for this period, and I can only really find Campbell's Soup for next week. And really, it's a bearish sort of picture of late. But key Fibonacci line around that 38.2%, $50-$51. I remember, they're an international company bought up on Campbell's Soups, but looking like it could be, if it's this key line's broken, moving on down towards $50-$49. So that's earnings watch. And the last slide we've got here for the moment, we've got 3 I like and 3 I dislike. We have Mosaic Company, the top chemicals fertilizer company, looking like it's going to break down, lost about 40% of its value in the last few months, pushing south again. Newmont Mining, NEM ticker, again at lows and maybe moving towards 36. They are into gold, copper, lead, all sorts of mining ventures around the world. Then we've got MetLife, the insurance company, again retesting those lows around $49, maybe pushing next towards 41. And 3 I like, Super Micro Computer, ticker SMCI. Look at that huge gain from August of 21, nearly 600%. Next stop up, 281. Mentioned the cruise liners. This is a weekly chart. I'll move that back. The others are daily charts, just to show you, there's the COVID fall. And actually, we've had a really good recovery of 155%. So maybe some more upside to, nearly $100. And finally, Palantir, cybersecurity company, on a great run up, pushing highs. Just about a weekday yesterday, couldn't get through that sort of 15 area. If it can, 17 is the next stop. And just to wrap things up, social media, I always look at the buzz of what's being talked about out there over the last 24 hours. And in terms of stocks, it's been SoFi, Nvidia, C3AI, Starbucks and DraftKings, and also advanced auto parts. So keep an eye on those stocks. In terms of sectors, it's been oil and pharmaceuticals. Don't forget economic schedule news. We've got later the payroll data, but the big one tomorrow, Friday, non-farms. I'm expecting some volatility to be added into the mix there. So that's your morning kickstart all wrapped up. Hope you've enjoyed the show. Stay tuned because there's loads more stuff coming out on the Benzinga channel. Good luck with the trading, I guess, and hope to see you in the next show. And profitable days trading ahead. See you soon.